Hello there. Good evening. My name is Julie Tallman with PREIshare, and welcome to tonight's discussion on the secret to liquidity for passive real estate investors. This is a really important movement for us. We've been just 2 years in development now, just now rolling out this technology, and we're excited to share the technology with you that we feel really solves some challenges for what this industry really needs, and that is liquidity for passive real estate investors. Just a little bit of housekeeping, and then I'll introduce the two gentlemen here with me and we'll get rolling. We are recording tonight's webinar, so you can pick up where you left off. We'll send this out to you if you're registered. And also feel free to send this to anybody that you know is a passive real estate investor and needs to hear this message or that we may be able to help with whatever their real estate needs are at the time. At the bottom of the screen, there's a chat section. You can pop in there, let us know where you're joining us from, say hello, tell us your name. There's also a QA, and this is where you're going to want to put any of your questions. So as we're working through, Christian's going to do a really great presentation. You'll get a lot of information. You can type questions as we go, or you can wait to the end. Either way, we're going to do our very best to make sure that all of your questions get answered in a timely manner and then move forward. So pretty soon I'll hand this over to Christian and he will lead through that discussion. But I do want to introduce you to our VIP guest of the day, guest Michael Anderson. He's the CEO of AKA Partners. And for any of you that don't know, AKA Partners is actually one of our PREIshare pre-approved sponsors. So they're within the pre-approved sponsor program. We have fully vetted them. We understand how they work, their past deals, and work in partnership with them. Mike has a keen understanding of real estate, and after getting his master's of architecture, he's also now the president of Architectronics. He's someone who, again, has seen real estate from a lot of different angles, and so we're happy to have you here, Mike. Thanks for joining.
Yeah, thanks for the introduction.
Absolutely. And Christian Sadler, if you've seen anything on PREIshare, you know who Christian is. Christian is our VP of Investor Relations. He is the PREIshare sponsored Fundication Show guest. He's the Fundication Show host. And it's important to note that also he has over 20 years of commercial and residential real estate experience. He knows the business inside and out and is really the perfect experiential mouthpiece for our company. So take it away, Christian. I think you've got a presentation for us here.
I do indeed. Thank you so much, Julie. You are such an asset to this team. Really grateful for you and everything that you do. And Michael, excited to have you on as well. I'll bring you probably towards the end. But for anybody that's watching and you've heard the name Michael Anderson before in PREIshare, you've probably heard of our CEO, which happens to be the father of Michael Jr. here. And I really respect both of these men so much and what they've created. So Michael, I'm excited to chat with you later on. So let's jump right into it. Let me make sure that you guys can see my PowerPoint. So I just need to share my screen here real quick. And from the beginning, please. All right, I've got a little note here that says you guys can see my screen, so I'm just going to assume that that is the case. Today we're talking about the secret to liquidity for passive real estate investors, and this is one of the biggest issues. And one of the things that I am so honored to be a part of this group for is Michael Anderson, our CEO, senior. He really looks at this as his legacy to the industry. You know, he's been syndicating real estate for over 40 years. And this was one of the big issues that he really hated to see no to in a lot of scenarios, is when somebody came and they needed liquidity on their investment, there usually wasn't much of an option for doing that. So we're going to talk about why there is an option now. But the first thing I want to do is get something out of the way. And that is who we're talking to. We're talking to passive investors. And what is a passive investor really? So Julie mentioned that I've been in real estate for going on almost 20 years now. And during that entire time frame, I have for the most part, also been a part of the training and education space within real estate investing. So I've seen a lot of people over the years decide that they want to branch their career into real estate. And many times they were looking at doing it because of the passive income or the idea of passive income. The longer I go, the further I go, the more I realize that is people have a big misnomer of what passive income really is. And so sometimes I would sit down with a doctor, or attorney, or a professional of some sort where their day is gone because they have something that takes all of their attention, but they know they need to be invested in real estate. So they think, oh, well, maybe if I just go, take some money and put it into a fix and flip here and there. I'm telling you guys right now, that's not passive. That is the least passive way of doing real estate, and take that from a guy who's flipped properties for a long time. Sometimes they'll say, well, I'm just going to buy rentals, and that's passive. And, it's more passive, but it's still not passive. If you've got, a few single family houses that you've bought and you're renting them out, you're still going to have turnover issues. You're going to have tenant issues. You're going to have all kinds of things. Even if you hire a management company to handle it, you're still going to have to manage your management company. I've seen a lot of people get in trouble where they go buy a few units, maybe even a couple of small multi-units. They put a management team in place, and guess what? They don't watch over it. And pretty soon, believe it or not, that manager wasn't honest and ethical, and they end up losing money. So you've got to manage your managers. It's not passive. It's not a truly passive income. So recently, as I've met Mike and I've met Kent, and I've met all these different people within the world of real estate syndications, I'm starting to realize the true passive income comes from somebody who has money that they put into a deal, a real estate syndication, and they trust another operator to go through the process of managing and operating that property, and they collect a check, where they continually collect checks and then take a big check on the back end. So that's who we are talking to. I'm talking to those of you who have invested in a real estate syndication. You're trusting another operator to do the deal, and so therefore you have bought a security because you are trusting in them to make you money. So an investor owns a passive interest in a current real estate syndication and wants to sell their interest is who I want to talk to. So you might also know yourself as a limited partner. That's oftentimes the term referred to. You have the general partner that's the operator, the limited partner who is the cash investor, or you may consider yourself a passive investor. One of the big things that we found is most of the people who we're trying to talk to on this webinar don't define themselves as anything related to what we're talking about. They don't call themselves a real estate investor even many times, because they just think of themselves as whatever their profession is. So be that a tech executive, be that a dentist, be that, whatever it is, they consider themselves something. And then this is just something that they do on the side, which is invest in passive real estate. And so that's why we want to get very clear on this. Now, the other thing that we do with this, though, is we allow GP sponsors who have excess shares that are passive shares and are interested in selling those. You can participate in the listing hub. So this is the quick agenda. I'm not going to run through it with you right now because I'm going to be going through it with you on the presentation, and I want to be respectful of the time here. So can you relate to being in a situation where you have money invested somewhere and your kid gets into a college and you realize that's a big cost that you need to take care of and you need to find liquidity somewhere? Maybe we have some car guys or gals on the line and the new Ferrari comes out, the new Lamborghini, whatever it is, and you're on the list. You're one of the people who can buy, and there's potential upside if you do, but you need the liquidity to do so. I know this is a big one right now. Changing economic times have you in a position where you want some dry powder. You want some money that can cover you just in case. Well, we have these offers for you. If your money is locked up in a syndicated real estate transaction, and it could be for 5 years or more, right? And we all know right now, there's a lot of LP investors, passive investors that were originally banking on maybe a 2 to 3 year timeline. that timeline has now become 5 years, 7 years, even 10 years because of the current economic times, the current credit market that we're in. It's causing a lot of disruption. So we built a solution. We are offering that liquidity through the PREIshare Listing Hub. Now, here's the big lie that's been out there, is for as long as the industry has existed, and when I talk about the industry, I mean the real estate syndication industry, since people have been pooling money together in ways where they use, for example, Reg D, so that they don't have to register their security. They've written rules that have limited their options for their passive investor, and they've told their passive investors that they own real estate and that it is an illiquid investment. So if that's the lie, what's the truth? The truth is you're buying shares in a company. That company owns the real estate. So it's just as if you bought into any other stock, for example, where you have a percentage ownership of a company. And those shares can be bought and sold, but oftentimes are limited simply by the rules in most of the offering documents out there. Most of those offering documents say something like, if you want to sell your investment, you must go back to the sponsor and find out if they will buy you out. And if they won't buy you out, you have to bring it to everybody else that's already in the deal and see if they will buy you out. And then if you can't find them there, then they may allow you to sell to an outside third party. Now, I want you to think about that, for example. How good of a negotiation standpoint are you if the only people that you can negotiate with know exactly what you paid for your investment and they know how badly you need out of your investment? There hasn't really been a good option to realize the gains that you may have seen throughout the time frame that you have held on to that investment. Now, here's the real issue. This wasn't malicious intent, okay? We are advocates of real estate sponsors, and most of those sponsors, most of those syndicators want to set proper expectations with their passive investors. They don't want to tell you that this is a liquid investment that you can buy and sell because they don't want to be responsible to try to get you out of a deal when they're focused on the deal. And most real estate syndicators have to scale their business in order to even make a living, let alone be wealthy. The whole reason that most people decide to syndicate real estate is because they want to do bigger deals than they have the funds for. So they want to pool people together to participate in the upside by creating a syndication. So they have to scale their business to make a living. And they also want to know who's in their deal. They want to choose who they're doing business with. They don't want some random person that has a bad attitude and is a constant nuisance being one of their investors, right? They want people that they want to deal with. And they don't want to have to backfill operating transactions when they're most likely focused on the future. Just like I said before, if they have to scale in order to make a living, they're usually, as soon as they get one deal good in operations and turned over to the operations team, they're out there finding the next deal and the next one after that. So until now, there hasn't really been somebody in the middle to align the interests of both the real estate syndicator and their passive investors. However, PREIshare's here. Welcome to the future. Now, this team is absolutely amazing. And I will tell you, we talk about the fact that we have over 100 years of combined real estate experience. I can tell you it's well over 100 years because Michael Anderson himself has over 40 years. And I know Kent, I don't know the exact number, but I believe he has over 30 years. And I have almost 20 years myself. And then you add in the rest of the folks in there, there's lots of experience. Here's some of the numbers collectively as a group. Now, I will say $7.3 billion is a large number, and at least $7 billion of that was from Mike, our CEO. So I'm not trying to pretend that every single one of us is doing billions of dollars in real estate in our career. Many of us are bringing other skill sets to the table, and that's the beautiful part about this team, is we are out there pioneering the future of real estate syndications. And we have a lot of people in the industry. These are guys and gals, only guys listed here, but guys and gals within the industry that have done hundreds of millions and even billions of dollars in real estate over the years. And they love the idea of what we're doing. It's a listing hub. In very simple sense, this is a classified site for the buy and sell of fractionalized real estate ownership through real estate syndications. And for buyers, you can purchase those fractional interests. You can browse those current deals. You can buy interests with proven performance rather than just going off of pro forma, like when you're looking at new deals. You can buy cash flow at a discount. In fact, the PREIshare fund, which we've launched, a $100 million fund, is there because of this, because we see the opportunity with short cycle investing and buying based off of track record. Now, for sellers, you can sell, you can liquidate your investments, you can go and start turning over your portfolio more frequently. You can open up the conversation and at least get an evaluation of what the market would pay, so that if you do have to give first right of refusal to your sponsor, you at least have a baseline and a starting point of where you should maybe negotiate from. It's a beautiful positioning to be in, and it gives you that opportunity to potentially get the money that you need now rather than hoping you can get it in the future. It's a quick 4-step process. So you're going to submit a form. There's going to be a quick phone call, and that's actually most of the time going to be Julie herself. She's amazing at walking people through this process. We'll get your listing added in there, and then you start collecting offers. There is the potential that you'll get an offer from the PREIshare fund, but there's also a whole slew of accredited investors that are now starting to watch this site so that they can take advantage of and buy these fractional shares for their own portfolio. And then you'll go through and you'll just execute that sale. You'll get the money. They'll be slotted in. And through this process, there does have to be agreement from your real estate sponsor. But we can help you with that process. We can actually help you breach that conversation with your sponsor to allow the sale, and even align escrow so that you can have everything set up, the money's in the right place, all check boxes checked off, and allow you to move forward. And right now we are offering you a free listing. So if you are on here and you have a fractional share in a real estate syndication and you're considering selling it, if you're saying to yourself, if I could get this much, I would sell. Let's get it listed. Let's find out how much you can get. Now, the interesting thing about this is oftentimes people look at this and the first thing in their mind is, oh, I can get rid of a bad deal. Well, I'll wait until I have something that's bad enough. Guys, that is the least likely scenario of using this listing hub. Now, I'm not saying you can't. You absolutely can. If you've got a bad deal and you want out of it and you're just not happy with your sponsor, list your shares. But you're probably going to want to price it according to the performance in what you're talking about. So you may consider there's the potential for taking a discount if things aren't going well. If things are going well, though, I think there's some real upside for you. So to claim your free listing, you're just going to go to PREIshare.com/free listing. We make this as easy as possible. With as hard as our name is, we have to, right? So PREIshare.com/free listing, and we can get you set up so that you can list your share. And now, what I've been waiting for is we have the opportunity to bring Michael Anderson Jr. from AKA Partners out, have him share a little bit about his experience as a real estate syndicator. And then, Michael, I'd love to ask some questions and even have you participate in answering some of the questions from the crowd. And let's talk about what you believe this means for the industry.
That sounds great. Thanks for the opportunity, Christian. Thanks for the presentation as well.
Absolutely. let's start with your background. Tell us what got you into real estate syndication and what you focus on.
Yeah, so well, I guess going to school, I went through about 20 years of architecture, and I've always wanted to get into the development side of things. And you know, through my dad, I was able to kind of learn about syndication and the possibilities there. And so anyway, that kind of drove my interest, and I went to several presentations and learned more about it, and kind of became excited. And I had some great teachers with Kent and my dad kind of stirring me on, and so I felt like I was standing on the shoulder of giants. So it was great, and excited to be part of this industry.
Yeah, I understand that feeling for sure. Maybe not to your level, but definitely feel like I'm standing on the shoulders of giants with what we're doing here. So what do you focus on with your syndications? Tell us a little bit about AKA Partners and what you guys have done.
Yeah. So our primary focus has been storage, largely because it's a very resilient asset class, and kind of our unique niche to this. You know, I came from, I guess, in the architecture world, I was a LEED certified architect. So that stands for Leadership in Energy Efficient Design. And from that, I really wanted, you know, to stand out in that way. So we brought in kind of a green aspect to our projects and our portfolios. You know, focusing on solar, kind of trying to offset some of the carbon emissions from our properties, and also neutralize some of the expenses from utilities. It actually ends up working very strongly for our properties because of the tax incentives, and the tax structures also help improve our performance on the property.
Okay, yeah, that's great. What do you think it's going to mean to you guys in future raises if you can, or when you can, because you guys are actually an approved sponsor with PREIshare, you can let your investors know that there's now a liquidity option if they ever need to sell?
I absolutely love this option. I mean, I think it's a great idea. And the reason is because what I want as a sponsor is my investor to be happy. And if they need to get out for whatever reason, I mean, you listed a bunch of those reasons in your presentation, I want that investor to be happy. I want them to have that liquidity, and to have that listing hub is a powerful asset that we can bring, and gives us a competitive advantage to some of our competitors in the marketplace. You know, we want people to be happy. And for me, I see it almost as a triple win. One, I've got somebody that needs liquidity, and I'm able to provide it. Two, I've got a happy investor because he can get out and get what he needs. And three, I meet a new investor that I can bring into AKA and win their support, and hopefully their future investments in future deals.
Yeah, I love that. And this is what we see as well when we talk about this. Is you're right, there's that kind of that triple whammy of, you know, you have this person who needs out for one reason or another, and if you keep them happy, they're most likely there to either invest with you in the future or refer you business in the future. They're going to talk highly about you, versus if somebody needs out and they can't get out, then, you know, it's probably not going to be as good of an experience. But then also, brand new investor, accredited investor that's slotted into that spot that you now get to build a relationship with. And I'm sure you've probably seen this over time, but oftentimes if an investor invests with us once and they enjoy it, they're probably going to invest with us again.
Yep.
So one of the other questions, and then I'm going to ask, let's see one of the questions that came in from the crowd here, but one of the questions that comes up a lot as we're having conversations with these LP investors is they say, what is my sponsor going to think if they find out that I'm trying to sell?
Oh, I wouldn't worry about it at all. All we want is a happy investor, as we just discussed. So, I mean, I'm going to try and do my very best to make you happy. And if you need that liquidity, I want to provide it. And so, and I mean, I love an open communication channel. I see you as my client, as part of our family. And so, yeah, we want success for you and success for us, because we all go forward if if everyone's paddling in the same direction.
Yeah, that makes sense. All right, so Madison Lee asked, what type of interests can I list? And so the key here is this is going to be fractional ownership, and it's going to be passive ownership. Those are kind of the key things. So it's passive ownership in a real estate syndication, which a syndication really simply is just when you pool money together and people have put that money in, and they're expecting somebody else, and this is the passive side of it, they're expecting somebody else to operate that business and give them some sort of return. And so if there's all kinds of different properties that could be involved in that. We have Michael here who does self-storage. We talk to people who do multifamily, for example. There's folks out there that are doing assisted living facilities. I mean, we're even looking at things where they're doing agricultural land in Hawaii that are on the listing hub. Some really, amazing and unique projects. So anything that is a fractional ownership in real estate syndication, and it's passive ownership. So if you are running the deal, if you're the operator, you're the GP, we don't want you selling everything and leaving your investors high and dry, right? This is just for the passive shares in that deal. All right, so this is from somebody anonymous. Does the listing hub help in negotiations between the buyer and the seller? We don't help in negotiations. That's something that we do not get into. And partly because the way that we wanted to do this is we are not broker dealers. We're not taking a portion of any of the transactions that go through. That's not our goal. Now, the only part that we take a part in, so to speak, is if the PREIshare fund decides to buy any of those interests. So there is an income stream for us there in full disclosure, but we don't want to be involved in your negotiation because we don't want any liability within your negotiation. And so what we can do is help you reach the conversation with your sponsor. We can help you potentially line up an escrow once you guys have decided on, a price. But up until that point, it's really between you and whoever that buyer is. And I think the same person asked, how much do we take off of each sale? I was answering that within your first question. We don't take anything from the first sale. The way that it works is it's just a flat listing service. Currently, we have that at a very low cost of $50 a month. And for those of you that are watching here, of course, you have the opportunity to get your first listing for free. So we take a flat fee for you to list, and then I guess there's some potential that you could, do some additional featured listings, which we're building into the website in the near future. But other than that, we don't touch any money from the sale. And I answered that one. Say that again.
I just want to know if you saw this one from Ryan. Ryan asked, what types of listings can be posted on the listing hub?
Yeah, so Ryan, we actually answered that. That was one of the first questions. So any listing that is a fractional share in a real estate syndication that is passive, it must be a passive share, and we can list those. And then another one, when I bought into my property, I should probably have you doing this, Julie. I think that's what we've done in the past.
I'll ask, answer, no problem. Anonymous asks, when I bought my property with my sponsor, they were offering me the depreciation each year. That's a good question. Things have changed for me and I no longer need that each year. Can I sell this type of position?
Yes, absolutely you can. So with the way that it works is that, that can flow through. I can't say that it will flow through, but when the new person fits into that spot, they'll have to talk with their tax professional about whether they can capture that depreciation buying in later stage. And so I don't want to try and answer any tax questions. The answer is yes, you can sell your share. Whether the tax depreciation benefits flow through, that would need to be answered by a tax professional. And it's probably going to be determined by how the deal is structured, and then also how the buyer is structured and how they run their business. So it's a big question. It's a good question. That would have to come out through negotiations. But yes, you can list. Sure. Here's another question.
Yeah. So Stephen asks, can I list my listing on the hub if it's a TIC or if it's a fund? So I guess they're asking if they've invested as a TIC partner, or if they're investing in a fund in general instead of just a property.
Yep. So let me clarify this. And most of these are about PREIshare specific, and that's the only reason I'm not diverting to you, Michael, on this one, on these ones. But TIC stands for tenant in common, for those who might be on here and not understand. Now, in that situation, everybody is going to have to agree to the sale, because in a tenant in common situation, there's a little bit different rules than a syndication, right? And there's some benefits to that. A lot of the reason that TICs are out there is because you do have ownership in the real estate, and because of that, there's some tax benefits that you can take advantage of. But there's also just some more nuances. So the same way that we would breach the conversation with your sponsor and help you talk to the sponsor, we would probably give you some verbiage of breaching that conversation with the TIC group that owns that investment. But you can absolutely list it so you can get a baseline price and potentially have a buyer outside of your TIC group. And then if it is a fund, so the difference between a syndication and a fund, for anybody that's listening, I'm just trying to clarify some of this stuff just to make sure that everybody's understanding it. A syndication is typically for one specific project. So you pull the money together, you go buy one specific project, and it ends when that project ends. A fund, on the other hand, is where you're going to raise the money to go after a specific set of projects or a specific strategy. And so in some funds, that may continue on, infinitely until, that is ultimately dissolved. So yes, you can list your fund shares. Yes, you can list your TIC shares. And yeah, just make sure that you clarify that within your listings.
Perfect. Thanks, Christian. Ryan says, if I've owned a property for many years but can't refinance in the current market, can I sell or access the equity through this platform?
So if you've owned the property yourself, the answer would be no, unless for some reason you're able to change the ownership direction of it and you decide to syndicate that out. But at that point, you would be doing a new raise. So talk to us about becoming an approved sponsor with us, and there's the potential there. But this is not a way for you to access equity in just a standard property. It is really for those who have fractional shares, fractional ownership within the property already that is passive ownership. And so that's some of the key things. Now, Ryan, I don't know your situation, and maybe you already have this and you're talking about a ownership in a syndication. And if that's the case, the passive shares can be sold.
Thank you. Yeah, and if Ryan, if you need to talk through that, get a hold of us. We'll Christian's so good at hopping on the phone and talking with people. Next question is, I bought into an international property deal with 9 other people. Can I list international properties?
It's a good question. I believe, as far as I know right now, we are sticking with US-based properties. So I can talk to the team about whether, at what point we may open that up. But as of right now, we're sticking with US-based real estate syndications.
Perfect. Seems like it's kind of the wave of the future. We'll have to get there at some point, huh, Christian?
Yeah. Well, lots of things are in the works. So, Michael, is there anything else that you would share? I guess if you were explaining this to other sponsors like yourself, what are some of the things you would share with them? And then, after you've answered that, I'd love you to also share what you think this could do for passive investors in the future.
Well, yeah, I mean, I guess if I were explaining it to another sponsor, I would say, the way we view it is that we're trying to, be customer centric or investor centric model. And so in doing that, we want to have good communication, and we also want to have, and through that good communication, we would like to have an open conversation. If they need liquidity, we want to help provide that as best we can. And I love the idea of having some way to help them get the best price that they possibly can, so that they feel that they're not being cheated or in any way. It's an open marketplace, that they are presenting their partial ownership in that property. So I love the idea.
Very cool. And what do you think this could, and when I asked that second question, I don't think I was really clear, but what do you think this could mean, like on a larger scale, thinking about if this was adopted, by majority of syndicators nationwide, what do you think that would do for the industry as a whole?
I think it would strengthen the industry, because it gives liquidity. It makes it, easier to move in and out of real estate as you need money, which is, similar to what you had talked about in your presentation, like the stock market. If you need to sell, you've got that option. And currently that is not the easiest thing to do through a syndication. So yeah, I think it just strengthens the market and makes it more liquid, and liquidity is better for everybody.
Absolutely. I recently read Sam Zell's book, and he's one of the biggest real estate investors in the United States, ever, quite frankly. And he says, liquidity equals value. So I love that. All right, I'm going to take this last question. Okay, Michael, do you feel as a sponsor that the value is in the ground up or the long-term hold? This is more of a real.
Well, I mean, this is something as a team we are constantly evaluating. A lot of times we try and model out our projects and kind of pick certain points that we think are going to be sell points, and try and figure out which is going to be the biggest bang for the buck for our investors. And, when you're projecting into the future, you often find that the future hits you. So there's all kinds of things that pop up. I mean, recently, with COVID and the changing in the marketplace, and currently now interest rates. So that's always a fluid situation. And so the sell point can, we always go back to our investors and say, hey, we're seeing this change in the marketplace. Are you guys interested in possibly taking advantage of that change in the marketplace? And if the majority of our investors do agree with that, then we tend to move forward and take advantage of market conditions. And I guess the second part of that question is whether it's ground up or a lot of things that we do are value add. Again, I mean, marketplace is so variable in that right now. Currently, we've got a project that we are starting is ground up down in Tucson, and looks to be a great project for us. And I think we're hitting the timing of the market real well. So, I mean, yeah, it's constant evaluation, and we have some really great guys that are constantly looking for real estate deals. And I mean, it's a fluid answer.
Yeah, that makes sense. You know what? Because I like where that question's going, Michael, I would love to extend, the invitation. And I know that it's already been there, and we've been talking about making it happen. But I would love to have you on the Fundication show, where we can really dive deep into strategy and thought process. And so for those of you who are wanting more and asking some of these questions specific to strategy and real estate, send us those questions, and we'll make sure that we ask them on the show. We'll create some good content, and hopefully we can make that happen soon.
Beautiful.
Great. Yeah, love to be on.
We'll schedule you, Michael. We do want to let everybody know, if you are part of an investment club or anybody that needs this service, we ask for your help in sharing the information, because again, the secondary marketplace has never been done, and we're now here, and this is just a huge educational push to help people understand what this is for, what we do, and that it really is there to help you as the passive investor. You can book appointments to learn more, like Christian said before, at PREIshare.com/free listing. It's right there on the screen, and I'll drop it in the chat in case you want to copy and paste that right now. Any last thoughts or items to share, Christian or Michael?
I would just say I would just repeat what Julie just said. Help us get the word out. You know, if you believe this is valuable for the marketplace to have more liquidity, have more of a fair marketplace for the passive investor, help us spread the word. We're starting to capture a lot of advocates for what we do, and many of these folks are the ones who have been in the industry for many years, and we really appreciate anytime somebody helps us get the word out about this. When you see somebody talking about how they sell their shares on Facebook or on LinkedIn or any of those places, you know, tag PREIshare. Let people know that we're around, because the faster this rolls out, the faster we're able to strengthen the marketplace with more liquidity.
Absolutely. Yep. Make sure and join our Facebook group of investors and sponsors to kind of keep the conversation rolling. One last time, PREIshare.com/free listing. If you want to place a listing, get that free listing offer. If you just have questions, if you have real estate questions, if you have PREIshare questions, we'll get you taken care of. And gosh, have a great night. We look forward to working with you guys. Michael, thank you for being here.
Yeah. It was fun. Thank you guys for having us on.
Absolutely. Sounds like we'll be seeing you on the Fundication show very soon.
Yep. Thanks, everybody.
Looking forward to it. All right.
Good night, everybody.